Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on stock charts, we'll look for long time frame trades. Don't forget to subscribe to my articles and Twitter feed just for intra-week updates. And the other thing, just to let you know, is there's a few money shows that Stock Charts is participating in. One of them coming up right away is the Seattle show. I'll be speaking at both the Chicago show and the Toronto show, one in July, one in September. So anyway, if you're checking those out, feel free to look for stock charts at those events. So we've just been stalling here for 3 or 4 days now. I wanted to go into detail about the airlines, because one of the things that surprises me is how often they're touted on I'll call it the news media. And the problem I have with them is the charts in general. The 5-year charts are just ugly. There's a couple of setups in them, but you have to be very selective in that group. So anyway, wanted to go through there. Retail, I want to talk about that specifically. So why now? One of the things that happens is in early July, normally we start to see retail go on its run for the year, and the strong stocks start to break out now, and then the weak stocks break out kind of September, October. But we've got back to school, and we've got Halloween and Thanksgiving and Christmas, kind of a big run up that all starts from here. So want to cover that off in quite a bit of detail today. And if we get any time after, we're going to talk briefly about materials. There's just some interesting setups. Lumber had a big rally last week, and it's trying to rally again this week. So the gold, we've been on it for a couple of weeks already. It's rallying again today. Had a couple of days setback. Everybody thought it was going into a new bear market. But oil, there was a big hammer candle that I discussed in my weekly roundup, and in that, or the weekly review, and in that review, I said that hammer candle, if it doesn't hold, we'll know right away. So watching that closely, oil was down 2% today, so we'll check that out. But some of my buy ideas for the week would be Walmart, Target, Costco. Those charts are looking quite nice. Okay, let's jump over, and this is the list of the retail stocks, and the reason I want to cover off them is the charts are actually quite attractive. So I've sorted them by scooter ranking here, and again, the reason to sort them by scooter ranking is that they have these are stocks that are performing well. Their price action compared to the rest of the group they're in, if they're in a large cap group or a small cap group, compared to the rest of their group, is attractive, and they're outperforming the rest of their peers. This group has a lot of stocks above 75, not a lot, but 20 or so, which is good. At least that gives you some choices. And on the lower end of the scale, if we just scroll all the way down here, you're going to see lots of them down here in the beaten down area, and nothing that you really want to own. All of these stocks over here are worth digging into, and the only reason they're worth digging into is because they don't have a scooter ranking, but they might be something new and could be interesting. I literally went through and just picked all of the clothing and accessories, apparel retailers, broadline retailers, footwear, personal products, put them into one group called retail, and they're worth looking at. So as an example, if they don't have a scooter ranking, they're either too small, too new, something like that we don't have them. So anything with this really low price isn't going to be involved in the scooter ranking system, because a 1 cent move would move this stock 50%. So we don't get involved with that. So the scooter rankings are for bigger stocks, and here's Gap being in one of the lowest performance. So what this means is 99.4% of the stocks are outperforming Gap based on the way we calculate the SCTR ranking. Even if you're not a fan of it's one method. So let's just say that if price action was such that it made the scooter out of sorts, I think you'll find for the most part when you look through the scooter rankings, it's a pretty good reflection on on the chart health. And here's JW Nordstrom obviously getting beaten all the way down and is now at the 2016 lows. So there might be a reason to buy it based on support in the past, but this, quite frankly, is a falling knife and looks a little too steep for me to participate in, that's for sure. Okay, so going back into this retail list again, as you're working your way through, some of the ones that are interesting is as they come out of terrible and start to move up. So maybe something in around this 25% level could start to be turning up. And this one, I'm just randomly picking them here. But if we just went through the list here, Sears Holdings, I mean, these are ugly charts down here. So hopefully you get the idea. But the scooter ranking in this case, 22%. These are low. And Alibaba. So one thing that's interesting about Alibaba's chart, again, the scooter ranking here is 26%. If this was to start to turn up here, when they get very oversold and then start to perform again, that can be a great time to catch these. So this is a full stochastic buy signal here where it's starting to turn up on a weekly chart. And I like the fact that this has risen above zero, the PPO, the momentum curve, and is coming down. And if it bounced here and then started to take off, this could be a really nice entry. So if this was stock you were interested in, and let's just say it is, then I'm looking to make sure that whatever I get to put my stop relatively close here within less than 10% and just use this low stop and take a smaller position size to make sure it starts to work. And then as it climbs, I could add into the position or whatever. But the idea being that we're starting to get signals starting to turn up here. And if it's going to start to rally, then that would be a nice place to get on the bandwagon. So again, just want to look at some of these in around this 25% level. And I've sorted them based on the scooter ranking. So that's kind of why I'm just working my way up here. And then here's Dillard's. That's just such a hard chart to invest in. Liquidity Service, that one doesn't look much better. Here's Buckle. This was a big retail fad name years ago, and then you can see it hasn't done anything. It just broke to near 2-year lows, so it's probably not something I want to look at. Moxford Industries, Polo Ralph Lauren. This chart's trying to get going again, a scooter buy signal here. This is a well-known brand. It did trend up through 2018, and then since the September high has been trending lower. Again, here's another one where the PPO was trying to make a higher low, and if this was going to turn and start to set up, that would be good. There is a big uptrend here that's trying to set up, so rising bases is okay, and you're close to your stop, so that's nice, and the full stochastic starting to give a buy signal. So that might be one. I would like it when this PPO line starts to break. And again, that looks like it would be just above zero. So in that idea, that's kind of the thing I'm looking for. I want to see that a long-term momentum trend is starting to break and a turn higher. And again, the stock itself has been, it's had a big uptrend, pulled back for, I'll call it 6 months or whatever. And now midsummer starting to set up for a move higher. You can take a look at it. There's definitely better choices out there. But the reason I want to kind of cover this off thoroughly is, first of all, go get a group of stocks, then go look at them. But there's two different places to look. One is if you're trying to buy support and then they start to turn up, that can be a nice place. And you can see back here in 2016, overall market had sold off and it started to rally, and that was a pretty nice entry point for multiple years. And so the PPO breaking this downtrend, starting to move higher, stayed positive for years, now is below zero. Well, if this starts to make a higher low here, that could be an attractive entry. And again, this full stochastic hasn't started to turn up yet. Normally, one of the things that you'll see is after a stock has had a full stochastic up to 80, and then it pulls back down to this 50 level or 30 to 60, somewhere in there, it pulls down and starts to turn up. That's usually a nice bull market signal and goes higher. In this case, it took you up for whatever, another 6 or 8 weeks, and then another hard pullback, but you can see the full stochastic rolled over. So if you're swing trading these, and again, they're really hard to own on any sort of long-term basis, this isn't kind of the right place to go looking. Okay, so let's just look up here. Here's TJX. This has been a great chart through 2018, pulling back. And now if it was starting to make a higher low here, this would be a nice entry, and your stop is relatively tight. So these are some of the other big names in here that are going. And this scooter's at 50%. So basically, in the middle of the pack in terms of outperformance. Price action isn't that great. Nike, we hear about on TV all the time. Let's just scroll up and get that. And what we see on Nike is that it's made a higher high in price, a lower high in momentum. It's trying to turn up here. So the full stochastic has given you a buy signal. I think if it kind of gets above its $85 level here, you could start to look at it and keep your stop very tight if it starts to roll back over. The reason is sometimes momentum can decelerate and then turn back higher, which would be obviously very bullish. If it turns up above zero, that's a very positive condition. And you see this back here where it just kept turning up above zero. That was nice. When we get this pullback below zero, a little bit of concern that you're starting to lose a lot of momentum, and the fact that this had so much less momentum on the March, April, May, to me is a concern. And so I would buy it, but I would have a nice tight stop on here. Okay, let's go to well, here's Amazon, so we'll just click on it. That's obviously a big name. In here, the chart, because the scale is compressed so much, it's hard to read sometimes. So then what I would do is I would just shorten the chart up, and that might help me out a little bit. This is obviously trying to bounce off the lows of last week. Looks like a bullish turn here on the full stochastic. If the PPO is going to turn up above zero, this is another nice entry. And again, it all depends. If you're bearish overall the market, then you might think that this is ready to just fall down. I like it here because you could set your stop relatively tight. Your signals are trying to turn up, and if they started to fail right away, you could be out. But you know, you have a hammer candle last week, which was nice, and trying to work higher. So, okay, I keep talking about getting to the top of the list. Let's do that. But there's lots of names in here that you've heard of. Coty is they own Gucci, they own Max Factor makeup, CoverGirl, I think, quite a few of them. So anyway, what you see here, this is trying to go higher, building nicely. I think I wrote an article on this not too long ago, but Cody's been working up. The scooter ranking is up at 99. One of the best looking price action, and the chart continues to push up and to the right. So nothing wrong with that one. Avon, same thing here. It's been trying to break out and build a base, so that's nice. You can see PPOs climbing here. Nothing, just recently broke out to new 52-week highs. I guess maybe it did that in here. But this big push here, clearly putting it up to almost 2-year highs and starting to move. So another good look. Let's go into view all so we can scan them a little bit quicker. So here's Target. And what I like about Target, Walmart, and Costco is they're all quite defensive, but also great retailers. And they all have some stuff going on right now in terms of e-commerce that's starting to ramp up. I don't want to say putting pressure on Amazon, but they're all starting to get their own shtick going where you can pick up the product locally, but order it online, or they'll deliver in one day. So they're all trying to get to that one-day delivery that Amazon's been working so hard on. So here we have Target, and it just pushed to a new all-time high here. The previous high this week was 88.64, and this was 88.07. So we've finally broken out here. Nothing wrong with that chart. Look at the acceleration in the last 4 weeks. This thing's just going straight up. And I think getting ready for the whole back to school makes sense there. LVMH, I think we've all heard of them, relatively large fashion house, and they're breaking out to new all-time highs. What's not to like? Here's Boot Barn trying to push to new 52-week highs, so that's pretty positive. Again, I want these signals to continue to follow through here. Under Armour just broke out this week to new 52-week highs, actually new 3-year highs. 2-year highs. So that nothing wrong with that. Scooter ranking up in the top right-hand corner, continuing to push out here, so that's great. Funko, this one's just building a consolidation period. Break above 22.5 looks pretty nice, and a relatively tight stop with your moving average. You don't want this consolidation range to give way. So Decker's Outdoor, this one just keeps climbing. Nothing wrong with that chart. Estee Lauder breaking out to new all-time highs. Looks pretty good. Lululemon, they continue to shine in the expanding into the menswear area, and this chart's pushing up nicely. Okay, and I'm not sure about this CFRUY company, but this chart is breaking out to the upside. I could go do more research, but the chart is telling me something nice is going on. Here's Ollie's, and this is Bargain Outlet. I've noticed the dollar stores are trying to improve a little bit here, so keep an eye on those, and maybe that's just defensive setting up. But Adidas breaking out to new highs. This is Under Armour's other ticker. Procter & Gamble continues to push up in personal products here, so that's defensive play, large cash flow, big one. So here's Elf Beauty trying to break out of this base. That looks nice. Unilever, same thing as Procter & Gamble, trying to break out and just gently climbing up. I love this breakout on Walmart. This has been setting up here. They bought that jet.com a couple of years ago, and this looks like it's just starting to get rolling. I think this one's got 25% upside, and you could just sit on that one as you head into the four seasons coming up. Ross Stores trying to break out again. L'Oreal, nice move out of here, had just consolidated for 2 or 3 months, starting to push up again. Nothing wrong with any of these charts. Okay, here's Costco, the last one I'm going to cover off. You can see breaking out to new all-time highs last week and holding up there this week. There's just, it's a beautiful chart. Bottom left, top right, that's the kind of thing you want. After it's consolidated here for about a year, starting to break out, that's a nice entry. Okay, so that's the look at the retail now. The airlines, I want to cover off the airlines specifically because they get so much airtime, and I'm a little worried that people follow some of that commentary. But the charts as a group, so I just went and said I want to bring up all the airlines groups. There's only 40 stocks in it or something. But here you can see this Skyworks or SkyWest hasn't done anything for almost 2 years, just sitting there sideways. If it broke out, fine. And again, we're looking at the best charts first. Here's Copa Holdings, and a breakout here might be a nice pickup. PPO right just turning above zero. This is trying to break through 10 months of resistance, or 11 months. If it could get through, you're at new 52-week highs. That's usually a nice place to get on board. Allegiant Travel, this one's trying to get going as well, very close to new 52-week highs. JetBlue, this has been building a nice rounded bottom base, like that price action. Anywhere in here is a nice buy point, with your two moving averages just crossing over the 10-week and the 40, and maybe put a stop under this week's price action or something like that. And if it doesn't hold the breakout, then you're out with small loss. PPO is still in negative territory, so you want it to get going. But again, these are the absolute best charts. They get worse from here. So here's Spirit Airlines, been downtrending for 3 or 4 months. Full stochastic buy signal from the big push up last week, but nothing that I think makes this an attractive stock. Look at the 3 or 4 year price action. So while it may be saving passengers money, it's not helping the shareholders. China Eastern Airlines, sideways for 5 years. Delta Airlines hasn't done, it hit its high in November, December, but really, have you made any money? This thing was $45 back here in 2015. It was $51 2 weeks ago. So that's pretty flat. No real reason to cheer that, and it's got a yield of 2%. So I think, when you're chopping sideways for 2 years, it's pretty hard to enjoy that. Hawaiian Holdings used to be, this great stock trending up, and it's been trending down for 2 years now, 2.5 years. you just got to stay away until it starts to fix its trend. Here's Alaska Airline near 4 or 5 year lows, just holding in here. Doesn't look great. Again, a breakout above 65 if you wanted to buy it, but it just looks like nothing you really need to own. Here's Love, Southwest Air. Again, hasn't done anything for 2.5 years. United Continental, this one recently pushed up to a high, but consolidating sideways for a year. It was at $83 in June of last year, and we're at $83 this week. So, or 2 years ago. So, 2 years, really no gain in there. LATAM Airlines, this one's at new 3-year lows. Nothing to like about that. Japan Airlines, that chart's just ugly. Nothing really to buy into. American Airlines trying to bounce off 5-year lows, but a downtrend for the last year and a half. Lufthansa downtrending for 18 months. Again, my point is that I don't find anything compelling about all of these charts, considering we just saw, Walmart and Costco and Target breaking out to new all-time highs, and they're right at nice entries this week. Ryanair, so another discount airline in Europe, really not, doing anything price action-wise. You're at 5-year lows. International Consolidated Airlines Group near 5-year lows. Avancia near 5-year lows. This chart, I zoomed in on it, and the reason was because the rest of the chart was kind of choppy and didn't really help us. But what you can see here is this one's actually trying to break out. I think it doesn't have an SCTR ranking, so that's why it's at the bottom of my list. Mesa Air, this one doesn't have one either. So this looks okay here, trying to push up to new 6-month highs after building, it IPO'd and started to build a base. That might have some attraction. Maybe this is going to be one of those growth companies for a while. That could work. Sacker Aviation, this one's, sideways for the last 2 years. That chart's just sideways. South China. Here's Air Canada, and they're... I'll call it doing a lot of financial engineering on the stock. So that's been working. And Chorus Aviation in Canada. And you can see this one's got a nice 1-year base trying to break out. So anyway, I'll look across the aviation sector. I don't see anything worth buying in there. So that makes it a little bit hard. I did want to go into some of the, not so much the international ETFs, but the sector ETFs. One of the things that, oil was starting to look better with that hammer candle. You can see this week it's having trouble. Oil services giving it all back. Oil is down 2%, but the oil index is only down 0.7, so that's good news. But oil services getting hit pretty hard. And here's the paper. Paper is also some of the lumber stocks. And what you see is it's trying to rally. And if we go look at dollar lumber, let me just go get that. This chart is trying to push up higher. You can see after pushing down to just below support, it had an inside bar last week, and now it's breaking out this week and trying to move above the 10-week. It's got a little bit of work to go here, but they're starting to close mills and all that kind of stuff. And so when the news is worst, sometimes it's a good time to start looking towards those stocks. So that one's interesting from that perspective. I just want to find there it is, semiconductors. They're getting hit pretty hard today. And look at the semiconductor chart. It's really hard to like this. It's pushed up to the high in April and now is stalling between the two moving averages below the 200, or I think this is 2050 and 200. And below this 50 period looks a little rough to me. So this isn't where we want the semiconductors to stall. That's a bit of a problem. And I mentioned the retail stocks. Again, the vast majority of them are going to be hard investments. I think the good ones like the Walmart, Target, Costco are a much better look here. And if Lululemon and stocks like that can keep breaking out, then maybe you want to get involved with those ones because they might move a little faster. But it would be helpful if they could get, you definitely want to be selective in that retail area. Buying the XRT ETF probably isn't going to get it done. The broker dealers, this is a leading indicator. Usually, if the brokers are breaking down, that's a problem. And you could see just the stranglehold, all of these moving averages, the prices wobbling around them all, and they're all coagulating around this 260, 265 level. To me, the chart doesn't have any upside. It looks stuck here, and all of the financials haven't been doing good. If it breaks this 250 level, that pretty much reverses the whole uptrend off the low, and probably the measured move would be back down to just where it came from. So broker dealers look hard here. The financials haven't performed that well. Biotechs, again, very exciting in specific stocks, but as a group, they've been trending down and haven't really been helpful. Here's the banks. There's nothing to like about the chart shape nor the alignment of the moving averages. The short-term ones are below the long-term ones, so that's not helpful. And we haven't gone anywhere since January, even though the overall market's up near 6-month highs, or breaking out to all-time highs in some cases. Anyway, with that, I think the issue we've got is a pretty mixed market, and you really have to be more selective on what you're trying to buy. I will say that the commodities, again, are trying to double bottom here, and if they could start to move up, that would be important. I've been surprised by the market's resilience in the face of these trade issues and the way it's held up. So it tells me that there's something behind the scenes that makes these institutional investment guys stay in, even in the stressed sectors or industry groups. But if we were to start to see some sort of price action that really changes that hard, I think we've got a couple of things coming up. And again, mentioned them a few times, but this month they're going to be particularly important. We have the Fed meeting next Tuesday, Wednesday. Then we have quadruple witching on the Friday. And then we have the G20 meeting on the 28th of the month. So we've got a couple of major news events coming up. And it's not so much that I want to trade the news. It's more like watching to see how the market responds to that news is what I want to watch for. And as we get that sort of trend change, that's an important place for us to be focused on. Okay, from the sector perspective here, XLY, just barely back above the 50 moving average. Consumer staples continue to push to new highs. Nothing wrong with that chart. Energy, again, breaking down after the hammer candle on oil started to roll. We're still holding the low, but it's not the big bullish push we hoped for. Already talked about the financials or the banks. It is uptrending, but look at the long-term moving average. It's still downtrending and hasn't really had a lot of enthusiasm. I don't know about you. This bounce last week wasn't so great into the financials. Healthcare, trying to test the highs, so that's another defensive. Here's the industrials. That looks like a head and shoulders setup with a 200-day moving average aligning it. Materials, trying to break out to new highs here, so that's more interesting to me. Technology, nice little rally, but we're seeing the semis underperform. Utilities continue to grind higher. And with real estate, that looks pretty good. And even the communication services have been low. So thanks for taking the time to join me. Lots of news there. Good trading, and listen for the commercial at the end. Thanks, everybody.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at Seattle